The directors of a U.S. company sometimes have to make the decision to cease business operations. In such a case, they generally liquidate the assets and dissolve the company. Here are some reasons that may lead to the dissolution of your company. Reason number 1, business problems. Losing a major customer, a large contract, or a key employee can sometimes cause your company to close its doors. A disaster, such as fire or theft, can also have disastrous consequences. Reason number 2, tax changes. Some changes in tax legislation can sometimes be detrimental to your company and lead to its closure. For example, the cost of products sold by your company is no longer eligible for a tax deduction for its customers. Reason number 3, death. The death of the company's founder or a key employee can sometimes lead to the company's dissolution. Reason number 4, legal proceedings. The fact that your company is being sued in court may also lead to its closure and therefore to its dissolution. Indeed, the legal costs of defending oneself are generally high in the United States. On the other hand, a judgment with a large monetary conviction can also cause your company to shut down. Reason number 5, intra-corporate conflict. A disagreement between the shareholders, directors, or officers of your company on the business vision or conduct of the company can sometimes lead to its dissolution. This is even more true when the two leaders of the company, who are also spouses in everyday life, decide to divorce. In either case, if there is no possible agreement between the parties, dissolution is often the best solution. The dissolution process generally ends with the issuance of a state certificate confirming the dissolution of your company. Again, several names are possible for this document, depending on the issuing state and type of legal entity. Articles of cancellation, articles of dissolution, certificate of cancellation, certificate of dissolution, certificate of termination, certificate of termination of existence, statement of dissolution, or statement of termination. Finally, here are 3 points you should remember. Point 1. The worst thing to do when your U.S. company stops business is to do nothing from a corporate point of view. American lawyers invariably recommend that you quickly dissolve your company, especially if it has been assigned an EIN tax number. Point 2. In the United States, there are reportedly more than 5,000 laws providing for personal action against directors or officers of a company. Most of these laws provide for a limitation period for legal actions that may be brought against company representatives. U.S. lawyers again recommend that you immediately dissolve your company when it ceases to operate. Point 3. Before dissolving your company and closing its bank account, you must ensure that all checks you expect have been cashed. For example, you are expecting a tax refund check from the IRS. If you close your company's bank account too quickly, you will no longer be able to cash a check made payable to it. On the other hand, once dissolved, your company will no longer be able to open a bank account.